Good morning, everyone. Happy Monday, and welcome to another episode of the Iowa City Area Association of Realtors Wake Up with YPN. Hope you've had a great weekend. And recently, there has been a lot of talk about homeowners associations, or HOAs, and the rules that surround them and how to navigate them in the real estate world, and also the financial impact that they have on our buyers. So today, we are very excited to have Holly Ethier with Hills Bank, a mortgage lender, joining us to help break out the details. So during our broadcast, feel free to put some questions in the comments and we'll be sure to get to them at the end. Good morning, Holly.
Morning. Thanks for having me.
Yeah, for sure. So you're a mortgage lender at Hills Bank, right? Which branch?
Correct. I'm in North Liberty on Zeller Street. I've been doing home mortgage loans for 12 years now.
Very great. Well, thank you so much for helping us learn a little bit more about HOAs. So can you tell us what a homeowners association is and the different types that we could encounter doing our day-to-day business?
Sure. So a homeowners association, also known as an HOA, is an organization or a group of people that make and enforce rules for residents that own properties in condos or planned unit developments. Some can be fairly strict and some are pretty lax depending on the situation or the type of property. And these rules can pertain to a number of different things, such as big ticket items like a condominium and their master policy requirements that would require homeowners association dues that would be higher than, say, someone who just has a shared pond that needs occasional maintenance. Other things that can pop up are restrictions on parking. Say this entity cannot park their boat or their RV in the driveway. There can be restrictions for that. So it's important to know what the restrictions are before you purchase the property, because that could potentially be a deal breaker for your needs.
Yeah, definitely. I know it can be a deal breaker for your buyer specific needs or down the road when you go to sell it. If someone's planning to, say, own or occupy a unit and they restrict rentals in the future, that could be a factor when they sell it as well. So what are some things, I know that when HOAs are established, that's one thing, but also when you're working with new construction, how do new construction HOAs differ, and what are things that are missed sometimes with those?
So a lot of times with new construction, the builder is the one that holds the HOA. It comes to a point once the HOA is turned over to the unit holders that the property can then be purchased on the secondary market, which is your fixed rate loan product. Up until that point, it kind of limits you because you're then not eligible for secondary market financing because it is too new and it hasn't been completed yet, which would limit you to some different options, which would be in-house financing on, say, an adjustable rate. These can be a lot more flexible when it comes to guidelines and restrictions. We would not have to look at budget and financials in this case if we did in-house instead.
Okay. And speaking of budgets and financials, when we are putting out our purchase agreements, a lot of times we make them contingent or subject to a review of the HOA documents. How would you advise newer agents to go about analyzing those documents once received from the seller?
So if someone's looking for fixed rate financing, which would be secondary market, having a mortgage loan officer review the financials quick, just maybe even take a peek at them before the offer is made or right after, just to look at the budget, see if it's going to cause any red flags, if they're maybe negative or not budgeting for potential assessments that could be needed. There's a few things that a mortgage lender can see kind of right off the bat that would make it so that wouldn't be eligible for secondary market and thus have to go in-house.
Those are some really great ideas to run them by the mortgage loan officer to ensure there's no bumps in the road. And speaking of still qualifying for loans, can you talk about how a monthly or yearly HOA payment can affect a buyer's purchasing power?
Absolutely. When purchasing a property that's in an HOA, a lot of times you're going to have monthly dues. Some are semi-annual, some are annual, maybe even quarterly. We're going to factor this payment into the total debt to income ratio when determining how much someone can qualify for the purchase of a new property. Because we have to factor that in, their purchase price might not be quite as high on a condo versus a single family dwelling, because we do have to factor in say $125 a month for HOA dues.
Yeah, that's really important information to know, especially for buyers who are looking at both condos or HOAs and single family homes. A lot of times to understand the difference of purchase price, there's more background information to take into account with the HOAs. And in addition, what's the difference in insuring a property managed by an HOA versus a single family residence?
So this is a huge one. There's a big difference between having home insurance on a single family dwelling versus having a home insurance policy on a condominium. These are called HO6 policies, which is also known as a walls-in policy, which is also the best way to describe it, where the unit holder themselves owns and maintains everything from the walls in. That would include your appliances, your personal property inside, anything that's inside your particular unit. The HOA, which you pay HOA's dues to cover, is in charge of obtaining the master policy. And the master policy is going to ensure the outside, the walls out. That would be the siding, the roof, any damages to the building itself, like the front door or railing. The HOA dues also help with the lawn maintenance or snow removal. So when you are a unit holder and you have your HO6 policy, you also have the master policy that the HOA owns. There is the potential for something called special assessments. And this is something we ran into quite a bit after the derecho, where if there is, say, a natural disaster or a hailstorm or a derecho and the condominium unit has any damages that need to be fixed and there isn't enough money in the HOA to fix it, there becomes a short. So then each unit holder is responsible for a portion of helping fix that item. So tree removal probably wasn't budgeted in for a lot of condos or HOAs. So that had to be divvied up between the people who live in the association, and they have to pay for it.
Yeah, definitely. I do remember a lot of new situations come up after the derecho, and homeowners associations had to work through those unexpected damages, definitely. So as we're wrapping up here, just to our watchers at home, feel free to throw some questions in the comment. But as a follow-up, looks like we have a question. Do homeowners associations usually cover broken sliding doors or damaged windows? Would that be covered in the walls-in policy?
So this is a case-by-case basis. There are some HO6 policies that will cover it and some that will be covered by the master, which is a huge reason why it is important to know what items are covered before purchasing the property in case some of these happen. Another item is the deck itself. Some of these condos have decks, and a lot of times that's going to be something that the master policy should be covering. However, after derecho, we saw a few instances where, to the buyer's surprise, it became their responsibility. So it can go both ways.
Yeah, it definitely can. And when looking at a condo property or a property owned by an HOA or managed by them, it can be important when looking at them because you may notice some deferred items or things that need attention, and that wouldn't be the seller's responsibility to fix on a remedy request. Possibly it was something that needs to go through the HOA, the board, and whatnot. So very good information to know. And I'm sure as a lot of our agents know who are watching, those documents can be quite lengthy and with lots of detail. How can agents who are getting familiar with HOAs or who may have buyers looking with properties like that best inform themselves, and what would you say the top things they need to know are to educate their buyers?
So I would suggest talking with a mortgage lender right off the bat, especially if you're going to be purchasing a condo. There are particular items that pertain to condos that don't exactly pertain to other single family dwellings, such as down payment requirements. And if you want to go secondary financing, what that would look like. We may have to go with the flexible in-house loan here at Hills versus the secondary market, because it could be a matter of a new construction or possibly a budget that doesn't have enough funds in it. Then another thing I would suggest too is the assessor's pages for the various counties. One rule for getting secondary financing is there can't be more than one entity that owns 20% or more of the whole development. There's also restrictions on rentals too, can't be more than 50% rental. So if you were to just simply go on the assessor's page right off the bat, type in the address and look to see who the neighbors are owned by. If you can already tell that ABC LLC is the owner of 6 out of the 10, you pretty much already know we're going to have to go in-house. So it kind of gives you a little bit of guidance right up front so you know what to expect.
Yeah, that's a great tip to use the assessor site as a tool, especially if you're looking at properties maybe on the nights or weekends, when you just need a good overview of what the possibilities may be when potentially offering on that property, and having those conversations up front with the buyer, and educating them in advance so they know when you're viewing a property, you can say, hey, remember when we talked about XYZ? This means you may need to switch to a different type of financing option. And knowing what that is versus being overwhelmed the moment you walk in the door to view a property. This has been a great educational morning for us. Thank you so much for joining a very complex thing, and it's important to know the details in advance and advise and educate our buyers and sellers of what is going to be needed during a real estate transaction for sure. So thank you so much, Holly, for joining
Thanks
us
for
this
having
morning.
me.
Yeah, definitely. Hope everyone has a great Monday. If you have any other follow-up questions, feel free to put them in the comments even after we are live, and we'll be sure to follow up with you to get you the answers. Have a great day, everyone.